Good morning everybody and welcome to this European session. Let's dive right in. So we've started to reach some of the high impact news announcements of the week. Yesterday we had the Eurozone inflation report and the US JOLT job openings report. The inflation report came in actually as expected, actually no changes, and the JOLT job openings report actually came in much better than expected, and that helped to lift the US dollar across the board. And it'll be interesting to see if we get further continuation of this strength throughout the week, especially as we have more employment data coming out today, tomorrow, and also on Friday as well. So we'll be keeping an eye out on that. And we have been highlighting that the US dollar is due a reversal. In fact, that's where most of the activity has been since last week. We had some good vol reversals on euro dollar, Aussie dollar on the intraday charts. In fact, this week as well, the weakness in the euro has helped many of our euro trades continue to downtrend to target levels. So that's where the theme has been, that weakness in the euro, profit taken from the big moves that we've had, the big uptrends. So something we've been highlighting to trade those reversals. Now, again, sometimes the market doesn't just reverse straight away. It goes a bit range based, and we see a bit of that as well on some of the dollar pairs. So we're going to be mindful of that. But it's certainly going to be a trend to keep an eye on. And we'll get an update of the positions when we head into smart charts. For today, the key news announcement is going to be the US ADP non-farm employment change report at 1:15 p.m. British Summer Time, UK time. And this shows the estimated change in number of employed people during the previous month, excluding the farming industry and government. Provides an early look at employment growth ahead of the government released employment data on Friday, usually 2 days later. Job creation is a leading indicator of consumer spending, which accounts for the majority of overall economic activity, and this payroll data is for more than 25 million workers to estimate employment growth. And we know from the webinars at the beginning of the week on Monday, where we had different central bank members from the Federal Reserve stating in speeches, live speeches, that they will be looking at employment data as a key indicator of when they're going to cut interest rates again and how big that interest rate cut will be. Because if you recall, several weeks ago, the US Federal Reserve cut interest rates 50 basis points instead of 25 basis points the market was expecting, a much bigger interest rate cut. And the reason they gave was the fact that they saw there were some issues in the jobs economy, right? So they were trying to get ahead of that and stimulate the economic environment. So of course, this jobs data now does become very, very important. And if we can start to see some growth in the jobs data like we did yesterday, then maybe there's a chance we could get a little bit more of a rally in the US dollar, because then the chances of a much bigger interest rate cut actually starts to dissipate. And then that might actually lead to a bit of strength in the US dollar. We don't know yet. We don't try to trade the news announcements. We don't try to guess what's going to happen next. We want to look for some surprises, really. Okay. And if the market gets a really, really big number here, it's going to be a really big surprise, and we might get a lot more movement in the US dollar. And it's that follow through that we want to be trading. Now, sometimes the volatility is very, very high and there's nothing we can do, and that's all right. But sometimes we get this surprise, everyone's readjusting their portfolios, and that movement, that trend can continue for a while, and that's the high probability stuff where we can get the high reward to risk trades, and we're trading an underlying theme developing in the market. So we'll keep an eye on those if that does develop. For now, let's dive into smart charts and let's see what's been going on. Okay, so first of all, let's get a quick update of where we are so far. Now, for me, I'm mainly a sort of medium to higher time frame trader, 4-hour daily charts, but make sure you're all tuning in to the live trading webinars every single day inside of smart charts. You can also capitalize on a lot of the fast time frame moves that have been developing, the intraday moves. Okay, so it's been great for fast time frame traders, intraday traders. So make sure you're attending those webinars and letting the team support you guys in your trading as well. But so far this week we've had a couple of things. So first of all, on the 4-hour chart phase changes, we've had euro against the Australian. So for those of you who know me from the 3-day live Forex workshops and through the back testing and forward testing that we do, you know that I love this type of setup here. High momentum, high probability, lower low, lower high cycle on the moving average zone where sellers turn up before on an angular price to attract the algorithmic traders, also building positions in an automated fashion. And we also had the break and retest off this trading range that had developed. So in this instance, we had that opportunity there, and because we're trading the euro and weakness and Aussie strength, and we know this week, if you're looking at your tools tab, that actually commodity currencies had been quite strong, Aussie and Kiwi. So we had that underlying sentiment and theme. So in those instances, we can go for those higher reward to risk trades, especially if it's high momentum, and you have the higher time frame in agreement as well. So we can go for higher reward to risk. So in this instance, squeezing out maybe a 2-to-1 reward to risk on this trade is actually pretty decent. All right, we will look for continuation. The problem is it's gone a bit congested and a bit sideways now, hasn't it? You can start to see the lower low cycles not as big anymore, a little bit smaller. We're starting to get back into these high points. We didn't make the lower low cycle, so it's starting to look like it could start to range a bit, taper off a bit, which is fine. But we traded the high momentum stuff here. We also were trading Euro New Zealand as well. So in this instance, we had the same thing: phase 1, phase 2, phase 1, phase 2, on what smart charts is finding as well. And of course, what we want to do is combine the power of algorithmic technology, AI technology, with human pattern recognition insights, the combination of leading and lagging tools, which leads to high probability trading opportunities. So we had these cycles developing off the moving average zone and off a trend line as well, and of course, breaking these low points. So again, we know that it's euro weakness, Kiwi strength. We've been seeing that in the market sentiment in the tools tab, and we know the higher time frame is also in agreement as well. So that can lead to the higher reward to risk trade. If you recall, we also had that phase 1, phase 2, phase 1, phase 2 on the daily chart as well. All right, so this is what I love, the repeated patterns of behavior that smart charts helps us to find in the market. That daily chart trade is pretty much the same as this 4-hour chart trade, right? It just happened literally a week later. Okay, so in this instance, we've had some good opportunities there as well, but for this week it was a 4-hour chart Euro Kiwi. We also yesterday were trading US dollar against the Canadian on the twin flips. So we had basically US dollar against the Canadian. So first of all, we know there's different types of trends in the market, all right? From your 3 days of Learn Forex, momentum trends, long-term trends, short-term trends are the 3 different types of trends that you learn in Forex to trade. So we know phase changes, T waves, great for high momentum-based markets, right? High momentum-based trends, things like twin flips, more looking at longer term trends. All right, so we had the same kind of structure developing off the moving average zone, but now we're dealing with larger cycle formations because this particular strategy looks for larger cycle formations. All right, we have been in this moving average zone for a while, but we haven't chosen to do anything until price rejected this daily low point here, which you can see on the daily charts is this low point here. So we broke below this low point, and we actually retested that yesterday, and we had this short trade here to this target level. Now in this instance, because of the volatility that we've had, with all the different geopolitical things going on between Iran and Israel and so on, in this instance, don't tend to leave really high reward to risk trades on the table because the volatility was quite high and markets can be quite choppy. So we just went for the standard reward to risk here. So in this instance, what we will look for, if this trend does continue, we'll look for momentum cycles developing on the phase changer and T wave to maybe participate in that move as well. We also had some losing trades as well, right? Because that's part and parcel of the game. And we had a trade on pound Swiss, which was a positional trade. All right, so those were the direct momentum based trades that we've been looking at, but we also have some positional trades. So what's the difference? So the trades we just looked at, the market conditions confirmed, boom, that is a trend, and no one can say anything different because we have the cycle formations in a confirmed market condition, right? Which is what you start off trading with, high probability. But there's also other situations where you have what we call positional trades, and this is where you haven't started a market condition. It's not confirmed, but there are clues that it could start a market condition, right? Now in those positional types of setups, we tend to lower the risk per trade, all right? And we only trade if there is the potential of high reward to risk. all right? So we cover the lower success rate by earning a little bit more per trade if it works out. So just something to bear in mind. If you're a complete beginner, you're probably not doing any positional trades anyway, so that's fine. But if you are, then we had pound Swiss, where price broke outside this small trading range, but actually came back inside this larger trading range, and price came into this moving average zone, and we were looking for buys to actually turn up and maybe try to continue move back to the top on this false breakout. So it's a positional trade because the trend hasn't been confirmed, because we don't have the higher high and higher low cycles. We're coming back inside of a trading range, but the reward to risk was good enough, to the top. But we had a bit of a shakeout yesterday on the Iran's missile attack on Israel, caused a lot of risk off sentiment. And basically risk off, you have what you call risk on and risk off. So risk on is where things are really good in the world, really good in the economy, and everyone's piling into risk assets to grow their money. So stocks are going up, commodity currencies going up, and so on. Risk off is when there's a lot of concerns around the world, okay, and this is where people exit their growth-based trades, and they exit stock markets, commodity currencies, and so on, and maybe go into safe havens like gold and the yen and the Swiss franc. So we had a bit of that yesterday, which is fine. Nothing we can do about that. That's why we always use stop losses, right? Because anything can happen at any point in time, right? So that's fine. So we took a loser here, but we lowered the risk on this trade because it is a positional trade. I mean, if buyers do decide to turn up, then we'll catch it on the 4-hour chart, right? Because then maybe the 4-hour chart will cycle higher. It's another way to get involved in the move. And then we also had a trade on the NASDAQ as well. We had a trade here. We were looking for this trend here to continue off the moving average zone, where buyers have actually turned up here before. And what we can see is some buys did turn up, but then, when we had the news of the Iranian missile attack, again, risk off, everyone dumped risk assets like stock markets, and it went the other way. It's fine, had a losing trade there, all right? So remember, trading the market, you're going to have wins, you're going to have losses. It's about managing what the market is telling you to do and just being consistent in getting probabilities working in your favor, all right? So a couple of opportunities highlighted on London-Sydney trading floors. So first of all, Aussie yen on a positional trade, because what we have here on the daily chart on Aussie yen on the twin flip is that we had this really big move to the downside, and quite often what can happen is the market can go a bit range based after this. However, the preceding long-term trend was down, and what's interesting here is that we have come to the top of this potential range situation, okay, which dates back quite some distance, and right now we're at the top of this range based situation. So we had these turning points here, turning points here, turning points here, and we're at this area. Also happens to be around that moving average zone where we know trends can develop. So like here on the left hand side, price got above the moving average zone, we started to bounce off of it. So in this instance, we're in that moving average zone, we're at this area where sellers have actually turned up here before, and we could be trading at top of the trading range, right? So it is a bit more of a positional trade there. And so in this instance, on top of highlighting the potential trading opportunity, also helped to do the risk management work. By clicking the sell icon, it will populate an entry price of the blue dot, stop loss of the red dot, target the green dot, which can all be adjusted according to your own user preferences. On a positional trade or a range trade, this large will often lower the risk. And then if the sellers do turn up, we'll try to use a trading stop loss maybe to get down to the bottom of the trading range to get that higher reward to risk on the trade. And it's important to keep that risk low overall with your maximum percentage allocation. Make sure you're able to deal with the random distributions or wins and losses that develop throughout the day, week, and month. And then we'd like to set an expiry, and I like to set a current bar close expiry on that trade, all right? And then we also have the France 40, which could become interesting as well on the market breakout strategy. So on top of what Smart Charts is finding, we can also see price right now is in this moving average zone, all right, where we can see buyers have actually turned up here before. So in this instance, we're also on this angle to price a trend line where buyers have turned up here before. So we have this confluence of support areas where maybe buyers might decide to turn up here again. If yesterday was a bit of a shakeout, all right? Yesterday had a bit of a risk off. We had a bit of a phase 2 in stock market indices, which have been rallying higher. So of course, we're going to be looking to see if we can trade the end of phase 2, beginning of phase 1. Now, maybe the phase 2 move is going to keep on selling off, and there's a lot of fear in the world, and stock markets keep on going lower. But no one can predict the future. We can only just trade what we see in front of us today, right? So, and be prepared for potential market movements. So right now, we're still on the trend line in the moving average zone. Buyers have turned up here before. We're going to be ready and waiting to participate in the move if buyers do decide to turn up again. If they don't, that's fine. Your pending trade expires, didn't win, didn't lose, didn't cost you anything. If they do turn up, but not enough buyers turn up, it turns around. Fine, you've got your stop loss there to risk protect you. And if it breaks the trend line and starts a downtrend, then guess what? We'll look for some shorting opportunities to participate in that sell-off, all right? So we have all bases covered. Now, on top of highlighting the potential trading opportunity, also helps to do the risk management work as well. But by clicking on the buy icon, populate an entry price at the blue dot, stop loss at the red dot, target the green dot. Do all your risk management calculations, can all be adjusted according to your own user preferences, of course. And we like to set an expiry on this particular strategy. We'll give it to the end of the day and decline or accept the trade at the bottom. All right, so just a couple of things to highlight there. I mean, there's plenty of other trading opportunities that are developing throughout the trading day. So make sure you're tuning into the live trading webinars and help yourself to participate and identify them as well. But in the meantime, that's it from me. All the best with your trading. See you next time.